Yesterday, in the last class, we talked about time of supply. Class we were talking about time of supply, point of taxation, when supply would be assumed to be due, or I would say that when the tax to be paid on the supply. So today we are going to talk about the next topic, which is value of supply. Since we have determined when the tax is to be paid, now we need to ensure, we need to calculate that on what value the tax rate is to be applied. Because we have discussed earlier, there are various rates of tax. Starting from 3%, there is a rate of 12%, 5%, 18%, and even 28%. But this percent has to be calculated on a value. So what value you will calculate the tax? That is an important question. And how do we determine that? We have to first determine the value of supply. So how do we determine the value of supply? So there are some rules which is called as valuation rules in the GST. So at the first point, what comes in our mind that on what value the tax is to be applied. It's very simple rule. The first rule is about on what value the transaction have happened. For example, I have purchased a packet of biscuit for 10 rupees. So that is the value which I am paying for. GST has to be applied on that value only. 10 rupees, which is known as, which is transactional value. On what amount the transaction is being happened. So that is the first rule of valuation, that GST rate has to be applied on the transaction value. Some reason transaction value is not correct, not available, or maybe some other reason, or even if everything is okay, we must we must know what are the rules that we need to take care while determining the value of supply. So the value of supply on which the tax is to be applied should be inclusive of these all things. So what are the things that should be included in the transaction value, or I would say the value of supply? Number one, all taxes except GST. So for example, I have purchased 100 rupees biscuit, and or maybe I have purchased a 100 rupees biscuit on which there is some local tax applied by municipality, then definitely that tax has to be added. Maybe that is 10 rupees. So the total value of supply would be for me 110 rupees. Now GST has to be applied on 110, not on 100, because all other taxes should be added in the value of supply except GST. Definitely GST should not be added to arrive at the value for the GST. Now this is one line which is a bit confusing maybe for you. Let me explain you very clearly. Amount payable by supplier incurred by recipient and not included in the price. That should also be added to arrive at the value of supply. Now what is this? Take an example. Take an example. I went to a shopkeeper to purchase biscuit that is of 100 rupees. Now shopkeeper has said me one thing, just pay me 50 rupees, only 50 rupees. Why? Because just an hypothetical situation, that 50 rupees is something which is already paid by me as a purchaser of biscuit. Now, how would it possible? So let's take an example of a service of stitching. So on Diwali, you must have purchased new clothes, or some of you might have got your clothes stitched by tailor. So in the case of tailor, what happens? In the case of tailor, you went to a tailor and asked, hey, mister, I want a new shirt. What he says? He says, okay, get me the cloth and I will stitch it as per your measurements. I say, no, I have no time to purchase cloth and all. Just I need a white plain shirt that you can purchase at your own, and then I'll stitch it. Okay, no problem. So what's simple, then you will stitch it. Then simple thing, what that person has done, he went to a shop, he purchased a white cloth, the tailor purchased a white cloth on your behalf, and then he asked you over the call, I purchased the shirt cloth, can you please pay him? It will be reduced from the price that you will be paying at the end. So for example, he has quoted a price of 2000 rupees inclusive of tailoring as well as the cloth. He didn't disclose the whole things, that how much is the cloth and how much is the stitching cost. He just said, I would charge 2000 rupees for a complete buying and stitching. And when he went to purchase the cloth, he directly asked you to pay the amount to that cloth purchaser, to the cloth manufacturer. So you purchased, so you just paid maybe 1200 rupees or just 1000 rupees to that cloth merchant, because it was asked by the tailor to do that, and he said, I will reduce it from your price. So when you went to take the shirt which was stitched, you paid balance 1000. Now on what price the GST should be paid? 1000 or the whole 2000? So the answer is 2000. Why? Because the 1000 which was payable by supplier but incurred by recipient, that is you, because it was to be paid by that tailor to that cloth merchant, but he didn't pay. Instead, you paid, and it was not included in the price now that you are paying, which is 1000 you are paying now. So the GST should be applied on the whole 2000. This amount payable by supplier but incurred by recipient should also be included in the value of supply. Incidental expenses like packing and commission. So maybe that tailor, what he did, he charged, or even in all the malls, what happens? They charge 10 rupees for the polythene, for the poly bag that you purchase, that you buy, or maybe they charge some, or maybe if you order something from Flipkart or Amazon, you would see that there are packing charges, 10 rupees, 20 rupees, 50 rupees. Believe me, that are also under GST at the same rate. At the same rate that is of the main supply. For example, if you are purchasing clothes, if you are purchasing ready-made garments, and there is a packing charges of 50 rupees, the GST at the rate 5% would be applied on the packing charges also. And maybe any other incidental expenses like commission or anything, the GST should be applied on that also. So the value should include these things also. Any subsidies, if any applicable on the supply, that is also included in the value of supply. Any interest, late fees, penalty for delayed payment. If you have purchased 2000 rupees shirt from the tailor, but you didn't pick it up for 15 days, so that these stitching people, they have a rule: if you don't pick up the goods within 15 days, you will be charged 100 rupees extra or something like that. That 100 rupees is a penalty for delayed payment and delayed pickup, whatever you call it. That is also included in the value of supply. That means GST is to be charged on that amount also. Value of supply. If there are any questions, please let me know. I have completed this topic, value of supply. If there are any questions, please let me know. Let's move to the next topic. Place of supply. So before we move on, I can see there are a few more attendees. So what I'll do, I'll take this topic, value of supply, again at the end. So those who have missed it, you have an opportunity that once I complete the class, I'll take this topic again if any one of you is interested. Let me take to the next topic, which is place of supply. Now this is very important, that we have determined that the tax has to be paid on the value. We have determined about the valuation. We have determined when the tax has to be paid. So we have determined two things: when and on what. Now the question next arises is, which tax is to be paid? IGST or CGST as GST? Or I would say rather, which state the tax should go? It should go to Rajasthan, it should go to Delhi, it should go to Maharashtra, it should go to UP, MP. We have to determine that, because there are so many states involved in many cases. If there is just one state involved, there is nothing to think. It's just same state in which everything is happening. For example, you go to your nearby shop, you purchase a biscuit packet and eat it up. The shop is in your state, you are also in your state, and everything is in your state only. The tax would go to your state, and the CGST, SGST would be applicable. But when this place of supply rule would be important, when multiple states are involved. For example, you went to Delhi, you purchased a biscuit packet, but you ate that packet within the Delhi itself. Now, who should get the tax? Delhi or maybe your own state? For example, in your case, Rajasthan, I will take an example. So I am from Rajasthan. I went to Delhi. I bought one packet of biscuit in Delhi. I ate it up in Delhi itself. Now, who should get the tax? Delhi government or Rajasthan government? Now, think for an hypothetical situation. I'm from Rajasthan. I went to Delhi. I purchased one biscuit packet, but I didn't eat it. I came back to Rajasthan, then I eat it. Now, whom should the tax should go? Now, just recall the last few classes. I told you one rule. The rule is principle of destination, principle of consumption. GST is made on principle of destination or principle of consumption. So very simple thing that you may need to think about in your mind, that place of supply rules are made to ensure that the tax should go to the government where where the goods or services are consumed or destined. The destination of the goods or services are relevant because there the government should get the tax. So in my case, if I just talk principally, I'm not talking about rule till now, principally, whom should the tax should go in my case? If I eat the biscuit packet in Delhi, the tax should go to Delhi government. Again, I'm telling you, it's not a rule, it's a principle. If I eat that biscuit packet in Rajasthan, the tax should go to Rajasthan government. Now, how would anyone know or how would government know that this biscuit packet was eaten up by Nitesh Gupta in Delhi or in Rajasthan? That might be a problematic situation. So for that, rules are there. But principally, you should be clear the consuming state or the destination state should get the tax. So that's a very clear rule, very clear principle of GST. Now let us study the rules. What rule says? Rule would not go against the principles because principles are the main thing. As I told, why place of supply is important to determine which supply is interstate, which supply is intrastate, or which supply is import or export. To determine that, rules of place of supply are relevant. So what is interstate supply? Simple. When supplier and recipient are in different state, IGST would be applicable. This is a general rule. There are some special rules as well, but the general rules are if supplier of goods, that is the seller and the recipient, that is purchaser, are in different state, IGST will be applicable. And what is intrastate supply? When supplier and recipient are in same state, CGST and SGST will be applicable. The exception is there. Supply to SAGE. SAGE is Special Economic Zone. If there is a special economic zone in your city and someone who is not in SAGE, that is out of the SAGE, in the normal city area, they supply goods to a business entity situated in special economic zone. In that case, this is treated as export, or I would say interstate supply. So this is a simple thing which you need to understand, that if a normal area person supplies goods to special economic zone person, then interstate supply or export will be deemed to be happened, and it will not be treated as an intrastate supply, rather it would be an interstate supply and IGST would be applicable. I'll explain you in next few minutes that why and how, but just need to remember for now this much. What is export now? So there is one interstate supply, one is intrastate supply, then what is export? Export are always treated as interstate supply under GST law, and that is why supply to sales is also treated as interstate supply. Exports are zero rated, and mind you, supply to sales is also zero rated. So sales supply and export supply both are zero rated. That means neither on input, neither on output, you need not pay any tax. There is no tax. Now let us take a more deep analysis of export things. When you do export, how zero tax would be applicable? So before that, let me explain you one more thing. You might have a doubt that sales supply is also export. Why? Because special economic zone, they have a clear rule that they have to supply, they have to enhance export in country, they have to enhance employment in the country, they have to enhance all the economic growth in country. For that purpose, the government has given that privilege that if you are in SAGE, special economic zone, then you need not pay any tax. And that's why for that purpose, the rules are made as like that supply to sales is like supplying export. You have exported it. I hope I'm clear about the reasoning why supply to sales is export and interstate supply, because supply to sales is deemed to be export because ultimately they have to export it. So why not consider it export at the first stage? So in sales, it's an export, it's an interstate supply because all the exports are interstate supply and IGST would be applicable. How much IGST? 0%. It's a zero rated supply. So IGST is applicable but zero rated IGST. Now there are certain more rules how to get rid of tax if you are exporting. So in case of exports, I told you there is no tax. But how? What is modus operandi to get relief from tax in case of export? So there are two options. If you are an exporter, you are doing export, you can opt for one of the two methods to get zero tax in export. It's not a simple way, it's a diagonal way. You can get a zero tax in case of export by two methods. The first method with method is simple. You pay whole tax. You pay whole tax on your sales. For example, you are selling biscuit packet to America. A biscuit packet is of 100 rupees. The tax rate is 18%. So the biscuit packet would be 118. You will charge 100 rupees from the exporter, from the importer of the America. So America person would pay 100 rupees to you, but you will pay 18 rupees. You will not collect tax from American person, but you will pay tax of 18 rupees from your own pocket to government by way of GST returns. Once you pay the tax of 18 rupees on the biscuit that you have exported, automatically within 1 to 2 months, that 18 rupees will be refunded to your bank account automatically. This is a procedure for with payment of tax in case of export. So just think about the situation. You received 100 rupees from America, but you paid 18 rupees to government. Then you get the 18 rupees back within 45 days. Ultimately, you have paid zero tax. So that is the whole, this method of having export with payment of tax and then claim full refund. And that is also automatic. You need not apply even. It will come automatic. There's another method without payment. Suppose you say, I don't have 18 rupees. I can't pay this. No problem. Don't pay it. Take just file letter of undertaking that I take an oath to the government that I will export this for sure and I will take the export realizations in foreign currency within 180 days of export. kindly allow me to export without payment of GST. Government is agree, okay, take it. In that case, you must have purchased some goods also, because you have sold now for 100 rupees biscuit, you got 100 rupees, sleep well, nothing to be done. But you must have purchased goods. You must have purchased goods, maybe some maida, some uh, sugar, or so many things for manufacturing of biscuit or selling of biscuit. That costed, that things that you have purchased must have included GST into it. And you have taken input, but the input is there in your GST ledger, not in your account. So you have paid GST not to government but to your supplier when you have purchased goods. Now you must refund, you must get that refund also, because export is zero rated. No tax on input, no tax on output. You did not pay any tax on output. But what about input? You must have paid input. You must have paid tax on input. In this second method, you need to apply for refund on inputs. So you will apply for refund on inputs and government will give the refund. So this is a bit semi-automatic. You need to apply, then you will get the refund. So this is the second method. Don't pay tax on output, but claim refund of input tax. In the first method, pay tax on output. Now, you might have a doubt in the first method that in case of first method, you paid tax on output, you got the refund of output tax. What about input? You must have taken input. Yes. So just if anyone could understood, when you are paying tax on output, say on 100 rupees, 18 rupees you have paid the tax to government, it's not that 18% you paid through your bank account. You must have some input in your GST ledgers. You must have utilized out of this 18 rupees, for example, 12 rupees would be lying in your input ledger of GST. You have utilized that 12 rupees and 6 rupees you have paid out of your bank account. But how much refund you got? The whole 18 rupees. So 6 rupees you got the refund, that is on the output tax, and 12 rupees you got the refund, that is of input. So in the both the methods you got refund of input as well as output. There is no tax on GST export case on input as well as output. So this is the case with the export. If there are any questions, please let me know, I will explain. This, you must file shipping bill. So there is a rule in customs duty, not in GST. There is a rule in customs duty that you must file shipping bill whenever you are exporting. So that shipping bill must be filed. And shipping, once you file the shipping bill, in the first case scenario, that is with payment of GST, you will get automatically refund. When you file the EGM, export manifesto, and GSTR 3B, that is GST return. So these all documents are required to be filed under customs law, and 3B has to be filed under GST law. Once you file all these, it will be a deemed application of refund under first case, that is with payment of tax. In the second case, you have to file refund application separately. So this is the case of export which I just explained you. Now we will talk about import. Since there are only 5 attendees, it seems everyone is celebrating Diwali today. Let's go on the next slide. What is import? So again, as like export, import is also treated as interstate supply under GST law. And IGST would be applicable, which is as per the Customs Act. Definitely IGST rates are same as IGST Act. Plus, on import, custom duty is also applicable, and cess as per Compensation Cess Act is also applicable. So on customs, custom duty, IGST and compensation cess, if any, would be applicable. What is the value for these all taxes? Now this is the value not as per GST Act, which we just understood, because for export, interstate and intrastate, all the taxes, the valuation is under GST law. But in case of import, the valuation should be assessable value as per Customs Act, on which basic custom duty would be added, any other tax or cess would be added, and then IGST would be made applicable on this value. So we need to understand that valuation for the purpose of GST would be is equals to valuation as per Customs Act plus basic custom duty plus any other tax. This will be the value on which Customs Act IGST would be applicable in case of import, and IGST and cess would be levied on this value. Now this is just about import. All other things are as per the Customs Act, which we will discuss when the customs we will talk, maybe after few classes the customs would be started, then we will talk about how the customs duty would be applicable. For now, we need to just understand IGST would be applicable because it's an interstate supply as per the GST law, and the valuation for the purpose of IGST would be assessable value as per Customs Act plus basic custom duty plus any other tax or cess. Now import of services. When supplier is outside India, but recipient is in India, but place of supply is also in India, then this will be deemed as import of services. The best example for export of services is Facebook. You are using Facebook, you are the recipient who is in India, but supplier Mark Zuckerberg is outside India, and place of supply is also in India because you are accessing Facebook on your computer. This is import of services. But are you paying GST on this Facebook? Probably no. Why? The rule will come very soon. In just few lines, I'll tell you why you are not paying GST on using Facebook services. Because the reason is import of services should be for consideration. It may not be for business. You are using Facebook for your personal purposes, not for business, but still it is an import of service as per the GST law. Whether you use it for business purpose or non-business purpose, it's an import of service, but it must be for a consideration. It must be for a consideration. Have you paid any amount for using Facebook? No. Have you paid any amount for using Google or Gmail? No. That is why you did not pay GST. Because if there is no consideration, no import and no GST. It should be for a consideration. It may not be for a business, or it may be for a business, but it must be for consideration. That's why you did not pay GST on Facebook. It's an import of service, but it's not an import of service as per GST law because there is no consideration. But there is an exception, a reverse exception. If you do the same from your sister concern, it may not be with consideration, but it must be for business. If you are doing some business with your sister concern who is abroad, who is in America, then you must pay GST on it. Even if you don't pay anything to your sister concern, you must pay GST on it, even if there is no consideration. But it must be for business purposes only. If you are taking free services of your father-in-law who is in America and he's not charging anything from you, or even if he's charging, you need to think about both the situation. If he is not charging from you and it's not for business, it's not charging, it's not for business, then there is no GST. So you need to understand, if it's a sister concern, it must be for business. It may not be consideration. Example I've just given, free services of Google or Facebook is without consideration. That's why no GST, no import. Downloading of songs from YouTube for consideration. If you have paid anything to YouTube for a consideration and you have downloaded it from YouTube, it's an import of service. GST would be applicable. Free service for a business by the branch in US, I told you GST would be applicable, import of service. So these are the example of how import of service would be applicable. Now, in case of import of service, if you imported before 30th June 17, service tax would be applicable. We know very well. GST came into picture from 1st July 2017. So up to 30th June, if you have imported a service, service tax would be applicable. If imported after 30th June, GST would be applicable. If imported after 30th June, but you have paid service tax before 30th June, GST would not be applicable because no double taxation. If you have paid service tax, don't pay GST. If you have not paid service tax, pay GST. If you imported after 30th June but paid service tax before 30th June, sorry, part service tax paid before 30th June, then on the remaining part you need to pay GST after 30th June. So this is a basic rule about import of service. Now these are the general rules. We talked about interstate, intrastate, export and import. These are the general rules related to place of supply, whether this would be considered Indian taxable item or not, whether this would be taxable for Rajasthan or for Delhi, we have to determine from the place of supply rules. Now there are some special cases. Those special cases, let's talk about. Place of supply of goods. If it involves movement of goods. Now, special cases we are talking about. The first special case is movement of goods. If any supply of goods involves movement of goods. Now just think about my favorite example, the biscuits. If you have purchased biscuit, is there a movement of goods? Now, let us take three examples. Case 1, you purchased goods from a shop, you purchased biscuit from a shop and ate the biscuits then and there at the shop itself. You ate that biscuits. Was there any movement of biscuit? No. If there was no movement, this rule is not applicable. Clear? Case 2. If I purchased biscuit from the shop, I took it to Rajasthan and I ate that biscuit in Rajasthan. In that case, the GST, this rule would be applicable because movement of goods have happened. Now where the GST would go, Rajasthan or Delhi? Simple. where the termination of movement of goods happens. So where the goods was terminated, where the supply, the movement terminated in Rajasthan. So the place of supply shall be deemed to be in Rajasthan because the movement ended, the movement terminated in Rajasthan, and that is why it would be considered as place of supply is in Rajasthan. So this is the first rule. If there is a movement of goods, wherever movement ends, the GST would go to that state. Delivered on direction of third person. Now, for example, I purchased the biscuit packet, but I said, sir, please deliver this goods, this biscuit packet to my home in Rajasthan. In Rajasthan. So, principal place of business of that third person. My principal place of business is in Rajasthan and I delivered the goods in Rajasthan. In that case, the Rajasthan would get the tax. Now think about some other situation. I belong to Delhi, but my family is in Rajasthan. I live in Delhi. My principal place of business is in Delhi. But I directed to that shopkeeper, please deliver these biscuits to Rajasthan. Now, who has given the direction? Me as a third person. So my place of business is in Delhi. I purchased from Delhi, but the goods is going to Rajasthan. Whom should the tax go? Not in Rajasthan, but in Delhi, because these goods are delivered on direction of third person. So in that case, principal place of business of third person, that is my principal place of business, which is in Delhi,